Hello and welcome back to Principles of Accounting 2. I am still your host, Dr. B. Happy to have you with us today as we talk about the final exam for this spring 2023 semester here at UDC for Principles of Accounting 2 at the Community College. I want to first and foremost thank all of you for your hard work throughout this course and throughout the semester. I know some weeks have been more challenging than others, and I sincerely appreciate all of you and your strong abilities to complete all of your coursework and to complete it successfully. I am happy to report the majority of you are passing the course at this point. That is wonderful news. There's only a few students who are still finishing a few last-minute assignments. They're getting caught up. So overall, the course did very, very well, and I'm very proud of all of you and your hard work throughout the semester. So that's the first thing I want to say. If for whatever reason you're still missing something, please make sure that any of your remaining work is completed by Sunday night. That is also very important. There are a few students that are getting ready to graduate this semester in this class, which is why I require that the final exam needs to be completed by April 29th. April 29 is the last day of the semester. The final exam is currently open and available to you now. You can open the exam, save the exam, return to the exam, just like you have done with your quizzes and homework assignments. The only difference here, of course, is that it can only be done once. Only be done once, just like it was for the midterm. So, since I have a few of you in the classroom today, I want to cover the final exam with you, and we could talk about the questions because I want you to be as successful as possible when you take the exam. The final exam is, well, I got 23rd on there. Does that sound right? I think it's 29. I'll move that. That's no problem. Final exam needs to be taken by the 29th, last day of the semester. If you're graduating, I recommend you take it a little earlier than that, so that way I get your final grade in quickly. Let's take a look at this exam. It's important to note that it's only one attempt. There are 20 points total for this exam. That is an important number to know, because that means the exam is worth 20% of your total grade. Woo! I know that sounds like a lot. It is a lot. But I want you to understand how the exam is structured, how all the questions are worded, and so we'll break down each question one by one. And for those of you on the call, please feel free to ask questions. This is your time, okay, to be successful for the exam. So, there are 20 questions on the final exam. 20. That's not too bad, okay? That means that each question is worth 1 point. The exam can be taken in multiple sittings, meaning you can open it now, open it today. You can start answering questions. You do not have to complete the exam all at once. You can click Save and Close at the bottom right corner. You click Save and Close, it means you can come back to the exam to finish it up. If you click Submit, you're done. That means it gets submitted to me for grading. Okay? Click Save and Close, that means you can come back. There is no timer. I don't believe in timers. Okay? Timers give me anxiety. I don't like anxiety, and I'm sure you don't either. So that's why I don't do timers. I don't do timers. I don't do timed exams. It's not very nice. Okay, that's just my opinion. As a professor that has been teaching this class for 10 years now, I don't do timers. It's just not very conducive to learning. So, again, there's 20 questions. You can save and close and return to it. Take as much time as you need. Just make sure that you complete the exam by April 29th. Okay? I cannot accept it past the due date, the last day of the class, April 29th. Cannot accept it past that day. Okay? Must done before April 29th, midnight, you see? Okay. Let's talk about the questions. I want to remind you, the first half of the class was covered on the midterm exam. We went through chapters 17, 18, 19, 20, 21. All those chapters, that was on the midterm. Okay, that is not on the final. The final exam covers chapters 22, 23, 24, 25, and some from 26. Say that again. The final exam covers chapters 22, 23, 24, 25, and 26. That's 5 chapters. 5 chapters, 20 questions. You can see where we're going with this. There's about 4 questions per chapter. Okay? 4 questions per chapter. There's 5 chapters. 5 times 4 is 20. Say that again. The exam covers chapters 22, 23, 24, 25, and 26. That's 5 chapters. There are 4 questions per chapter on the final exam. It's the most important piece of information I can provide to you. Now, looking at the questions. Knowing that chapter 22 starts us off, I can tell you that question 1 comes from the chapter on budgeting. Just by reading the question. Question 1 says, all of the following are necessary for budgets to be effective. Keyword, except. Except. For a budget to be effective, it needs all of these things except for 1. Looking for the exception. Then read through the options. Managers must be aware of potential negative of budgeting, such as budgetary slack. Goals should be challenging and obtainable. Yeah. Employees affected by a budget should be consulted when it is prepared. All budgeted amounts must be spent to ensure that budgets aren't reduced during the next period. Evaluation should be made carefully with opportunities to explain the differences between actual and budgeted amounts. So it's an interesting question. So we're looking for the exception. So which of these 5 options doesn't belong here? That's another way of wording this. So if I look at I think it's chapter 22 that covers budgeting, if I can remember that right. Let me see. It's running a little slow today. Hold on just a sec. Come on, open up the folder. 22 was on budgeting. Go figure. Which if I were you, I would want to have my PowerPoint presentation and my book open to chapter 22. I answer question 1. I would want to do the same thing. Question 2. Question 2 reads, which of the following budgets is not completed before the cash budget is prepared? Read the question very carefully. You see that it says, which of the following budgets is not completed before the cash budget? Remember the budgeting process. If I come down to my PowerPoint presentation, I go to the master budget components. I can already tell you the answer to this question. These budgets is not done before the cash budget. Sales, that's before. Production, that's definitely before. Capital expenditures, before. Selling administrative, before. So, which one of these is not? This one's kind of obvious. If you read all of the options for question 2, budgeted income statement, capital expenditures budget, I definitely saw that, and that definitely comes before cash. General and administrative expenses budget, that's here too, before cash. Merchandise purchases budget, that's here too, before cash. If this was a purchasing company, it would be for where production is. And there's another slide for that, wasn't there? It was for purchasing companies. Here it is. Oh, that's service. Sorry. It's here somewhere. I know. Purchases. Boom. Here it is. So capital expenditures, yes, before cash. Selling administrative, yes, before cash. Purchases, yes, before cash. Last option is sales budget. That's the first thing that we do. So it's not B, C, D, and E. Do all of those things before the cash budget. Only one answer left. So the budgeted income statement, that comes after budget for the cash flow. Remember, we looked at that when we talked about the steps to budgeting. The last thing we do is we budget financial statements after we've completed the master budgeting process. So that's question 2. Question 3. Production budgets, also chapter 22, always show both budgeted units of product, this will say production, and total costs associated for the budgeted units. No, does it? Maybe. How do I know? I got to go back and I got to look at my production budget. The production budget process. What is the production budget? You can figure out the answer to that question. True or false? So be careful with that one. You only got one of two options. Question 3 is also part of chapter 22. So the first 3 questions come from chapter 22, budgeting chapter. Question 4. You should be able to tell what chapter this is from. Question 4 states, which department is often responsible for the direct materials price variance? I recall something about price variances in a different chapter, so we know that this one is not from chapter 22. It's probably chapter 23. In chapter 23, we talked about this idea of price variances. So price variance for direct materials. One time ago, we covered chapter 23. I think it was like 3 weeks ago. We talked about price variances. Remember? I know these price variances for production fall within a certain area of responsibility. So, question 4 is from chapter 23. Again, open book, open note, open PowerPoint to help you to answer question 4. Question 4, chapter 23. Question 5. Standard costs, chapter 23, are used in the calculation of, it's funny, price and quantity variances. Yeah. The rest of these don't make any sense. Price, quantity, and sales variances. Maybe. I don't think so, though. Quantity variances only. Price variances only. Quantity and sales variances. That one's a very straightforward question. Question 5 comes from chapter 23. We're talking about standard costs. How does standard costs help us? Help us to calculate variances. What kind of variances? I remember talking about sales variances. Standard cost helps us to calculate those cost variances. See? That's question number 5. Comes from chapter 23. Use your slides, use your notes, use your book. Okay. Question 6. Direct labor cost variance, chapter 23. Again, be divided the price and quantity variances, which are most always controllable, and volume variances. Say that again. Direct labor cost variance, chapter 23, can be divided into price and quantity variances, which are almost always called controllable, and volume variances. That question sounds a little funny, doesn't it? Direct labor cost. Direct labor cost variance. Direct labor. Here's the interesting part. In the slides, if you look down at the notes within the slides, some really interesting information here. So, to help you to answer question number 6, you're going to find that in chapter 23. Look for direct labor cost variance. Within the book, the PowerPoint slides, and your notes, of course. Question 7. Standard costs. Again, chapter 23. Are present costs for delivering a product or a service under normal conditions. Sounds like a definition question to me. So chapter 23, look up standard costs. Question 23. Standard costs. So if I guess further up, if I'm not mistaken. Setting standard costs. Standard cost example. Oh, look at that. So interesting. So you're going to use chapter 23 to help you answer question 7. It's true or false, so be careful. Question 8. A unit of a business that generates revenues and incurs costs is called a generates revenue coming in. It has expenses, incurs costs, money going out. It's called a one of these 5. How do I know which one it is? Clearly that question comes from chapter 24. Responsibility centers. Remember the whole conversation on that? Oh, and look at this. We got cost center, profit center, investment center. If I look at each of these centers, I can figure out that one pretty easily, I think. Right? I think it's pretty straightforward. So question number 8 is going to come from chapter 24. It is 24. Question 9. Accounting system is set up to control costs and evaluate managers' performance by assigning costs to the managers responsible for controlling them. It's called on. Please don't get this wrong. This is a definition. This can be found in chapter 24. So the manager is evaluated on a couple things, right? Managers evaluated on their performance for controllable costs. The accounting system set up to control costs and evaluate managers' performance by assigning costs to the managers responsible for controlling them. If I'm not mistaken, that seems an awful lot like this. Responsibility accounting system. That's the definition. Question 9. Chapter 24. Question 10. Profit center managers are evaluated on their ability to generate revenues in excess of costs. Again, another definition. It's a profit center. I come down here and I say, well, it's a profit center. To generate an income. Over its cost? Yes. Yes. The definition of a profit center. Question 10, chapter 24. Question 11. Departmental contribution to overhead is the same as gross profit generated by that department. Now, let me think about that one. I think we talked about department contribution margin, if I'm not mistaken. Let me think. Yeah, we did. We talked about that. Departmental contribution overhead. Revenue minus expenses equals contribution margin overhead. Where I'm from, revenue minus expenses sounds an awful lot like gross profit. So, question number 11 comes from chapter 24. Departmental contribution overhead. That part of the chapter, and also look at your slides in your notes. Happy to answer that question. It's true, false. So you only got one shot. Question 11, chapter 24. Question 12. Oh, I love this question. One of my favorite questions. Potential benefits lost by taking a specific action when two or more alternative choices are available. This is a very clear question. This is a definition question. The definition itself is potential benefits lost by taking a specific action when two or more alternative choices are available is called. Well, I don't think that was 24. I do know that that was chapter 25. So if you open up chapter 25, we talked about relevant costs for decision making, remember? Pardon me. And in that conversation, toward the beginning, we talked about the different kinds of costs. Sunk costs, out-of-pocket costs, opportunity costs. Oh, would you look at that? That's interesting. Future costs are different between the two alternatives. Oh, look at this. This slide tells us the definitions for those three different types of costs. Sunk costs report from a past decision. Irrelevant to the future, okay? Out-of-pocket costs, we know the costs associated with making the decision, okay? Opportunity costs, potential benefits given up. One alternative is selected over another. That sounds an awful lot like the question I just read. Let me see. So benefits lost by taking a specific action when two or more alternatives available. Okay, so we know the answer to that question. It comes from chapter 25. Question 12, chapter 25. Question 13. Determine a product selling price based on the total cost method management should include. We're looking for total cost method to set the sales price. When I set a sales price for a product using the total cost method, I think it's further down. Pricing decisions. When I take into consideration these things, and I'm looking at the total cost method, I do what? There's 3 steps. Okay, great. What are the things I take into consideration? Total production cost plus markup. Non-production cost plus markup. Total production, non-production cost plus markup. Total production and non-production costs only, or only a markup. If I look at this, I know that I'm taking into consideration my product costs. So yeah, I need product costs. I know I'm taking into consideration my selling and administrative costs. I know I'm taking into consideration markup. Total cost per unit times the markup percentage. Total cost per unit times the markup percentage. I think we can figure that one out. Question 13 comes from chapter 25. Question 14. Oh my God, please don't get this wrong. Please don't get this question wrong. Okay. Question 14. Opportunity costs, there's that definition again, are the additional or incremental revenues generated by selecting a certain course of action. Say what? Opportunity cost. So it says opportunity cost, right? Well, that's an interesting question. I want you to think about that one. Whether it comes from chapter 25. Question 14 comes from chapter 25. Figure out whether it's true or not by reading the definition of opportunity cost to help you answer that question. Your book will also help you too. Question 15. Question 15 says, costs already incurred in the manufacturing of the units of a product that do not meet quality standards, the relevant costs in a scrap rework decision. Oh, that's a good question. Back to 25. Scrap rework decision. Tells us here. So, question number 15 comes from chapter 25. Question 16. The capital budgeting process involves all of the following except. I know I was sick last week, but can tell you the capital budgeting process we covered in chapter 26. Capital budgeting process is here. And the question says, the capital budgeting process involves all of the following except, that word except. Be very careful when you read the questions, please. All of the following except. So which of these 5 don't seem to fit too well? Except. Well, I can tell you the capital budgeting process includes these 4 steps. Those 4 conceptual concepts. It includes these people. It includes these things. But read very carefully. Know that question 16 comes from chapter 26. Chapter 17. I think you know where we're going with this. Which of the following methods considers time value of money? Evaluating alternative capital expenditures. This is a definition. Which of these methods includes time value of money, evaluating alternative capital expenditures? If I look at time value of money, that's the key phrase here, right? When I think about time value of money, I think about things like net present value. It includes time value of money. I think about things like figuring out which project's better using time value of money, net present value. So I can see that I use time value of money in figuring out one of these things. What do you think it is? That's question 17, comes from chapter 26. It's right in front of us, isn't it? Question 18. The process of analyzing alternative long-term investments and deciding which assets to acquire is known as. This is a definition question. Please don't get this wrong. Okay. Process of analyzing long-term investments help you to acquire assets. Well, I know that we covered that in chapter 26. So I promise you the answer is there. Question 18, chapter 26. Question 19. Please don't get this wrong. The payback period is the amount of time for the investment to generate enough cash, enough net cash flow to return the initial cost of the investment. Yes. That's the definition of the payback period. Question 19, chapter 26. The payback period. Where the hell that is? Oh, there it is. The payback period. This is the definition of the payback period. Look at that. Look at that slide. Look at the top part of that slide. And read the question again. Question 19, chapter 26. Question 20. positive probability index indicates positive net present value. Please don't get that wrong. Okay. Chapter 26 talked about that fancy net present value chart. Index. Remember the index. Present value index. Wherever the heck it went. Hold on a sec. Let me see if I can find it. The index. Yeah, typically does, right? So that's chapter 20, chapter 26. And my friends, is the final exam. There are 20 questions. It's a mix of true, false, multiple choice. It's worth 20% of your grade. Take your time. Okay, there's only one shot at this. You only get one try. We just covered every single question. I can tell you where everything comes from. Chapter 22 covers the first 3 questions. Chapter 23 covers questions 24, 25, 26. I'm sorry. I apologize. Chapter 23 covers Chapter 23 covers questions. There we go. Finally got there. Four, 5, 6, 7. Chapter 24 covers questions 8, 9, 10, 11. Chapter 25 covers questions 12, 13, 14, 15. Chapter 26 covers questions 16, 17, 18, 19, and 20. Are there any questions on the final exam from anyone on this call? Alexandra, Jamil, Maria, Anaya. Any questions at all?
No questions, Professor.
Okay. Now, remember, the final exam needs to be completed by April 29th. That's the last day of the semester. Okay, April 29th. It's a Saturday. It's open and available to you now. You can start answering questions tonight if you wanted to. And if you're not ready to finish it, don't worry. You can click Save and Close and then come back to it. Your answers will still be there. Should still be there. You can answer the rest of the questions. It's open book. It's open note. You notice there's no math on this final exam. Most of it's definition based. Okay, as long as you know how to read those questions carefully, you should do very, very well. I encourage you to take it as early as you want to. Okay, you can do it today if you wanted to. It's open. It's ready for you. Just make sure that it's done and completed no later than April 29th, which is a Saturday. Don't want you to wait till then. Please take it before then. Don't stress yourself out. Don't wait to the last minute. Okay? Because after April 29th, I cannot accept it. Okay? Those are the rules. The university policy. I can't accept anything past the last day of the semester. Very straightforward. So, if you need help, have questions, email me, call me, set up office hours. Also, for whatever reason, you want to retake a previous quiz, you didn't use that second attempt, take the second attempt. Okay? If you missed an assignment, go back and take that assignment. Okay? I need you to get all of your coursework done before the end of the term. Yeah, it's really that straightforward. I just want you to do well. That's why I'm here. I'm here for your success. Okay, that's why we just walked through the entire final exam together. We walked through every question. Okay? I want you and need you to do well. That's why I've worked very hard the past 14 weeks to get to this point. Okay, so please take your time with it. Use your notes, use your book, use today's video, whatever. Just please, please, please do the best you can. Take your time. Don't rush. Never rush, especially with a final. Anything else? This is our last time together. Anything at all? Right. If you need anything, you know how to get me. Email me, call me, set up office hours. I'm here for you all the time. That goes beyond this class as well. Okay? If you ever think of something a year from now, you run into a weird accounting problem. Oh, Dr. B, I just reach out to him. I'm here for you, okay? You can connect with me on LinkedIn, whatever. I'm always going to be here for you, even after the class is done. With that, thank you all so much for your time tonight. I sincerely appreciate all of you and all of your hard work. It means a lot to me. It really does. With that, I want you to stay safe, wash your hands, do the right things, do the best you can on this exam. And if you ever need anything, I'm here for you, okay? Thank you so much. Take care.